Hello and welcome to Smart Insight Traders. My name is Alan and today I'm going to show you how to get the perfect entry every time price reacts off your point of interest. In today's video, we are going to learn 4 easy steps that you can follow to make sure you never miss a chance to be a part of a winning trade. So grab some pen and paper because you're going to want to take notes. Executing a trade is perhaps the most crucial part of a trading plan. And if you're an options trader like me, the timing of your entry becomes even more important because not only do you have to be right about the direction of the trade, you also need tailwinds in the form of momentum to make your trade a profitable one. Before we dive into the details, I am assuming that you've already formed your bias and identified a point of interest where you want to enter the trade. If you don't know how to do that, watch this video where I give you a step-by-step guide on how to make a trading plan. And if you haven't yet subscribed to our channel, you know what to do. The first step in getting the perfect entry is going to be choosing the correct time frame to work off. Once you have identified your point of interest on a higher time frame, you have to pair it with an appropriate lower time frame on which you are going to get your entry. To make things easy for you, here is a guide that you can use to correlate between the time frame on which you have identified your point of interest and the time frame on which you are going to get an entry. If the difference between the time frames is too late, then you might be late in getting your entry. If the difference between the time frames is too large, then you might be at the risk of getting chopped out by fake entries. So make sure you choose the correct time frame. The second step in getting the perfect entry is to wait for price to react. Once price enters your point of interest, you don't want to jump in right away. Neither do you want to get too excited at every bullish candle that is formed. We are looking for a very particular pattern of price reaction to get our entry. So watch out for that pattern. The third step is the most important part, so I want you to pay close attention. What we are looking for here are more fair value gaps. And these fair value gaps tell us a story. I want to take you into the charts to understand the psychology behind this entry pattern. And once you get that, you are going to get the perfect entry every time. We are on a Bank Nifty index chart on a 1-minute time frame. We have identified a point of interest on a 15 minutes time frame. What we are expecting is for price to come and tap into this point of interest to give us an entry going back upwards. While price is coming down, what we are looking for is bearish fair value gaps, big red candles like this that are going to induce traders on this time frame to sell to give them an illusion of price breaking down. Here we can see fair value gaps that are being created on the lower time frame, on the 1-minute time frame as price heads lower. This is exactly what we want to see. This is the kind of price manipulation that we have been waiting for. Once price breaks below these lows, even more sellers get added. But see what smart money does now. As soon as this happens, smart money now has violently moved price back upwards, leaving behind a bullish fair value gap in its wake. All those traders who went short here looking at this big red candle, looking at the break below these lows, are now trapped. This is exactly what they wanted. All those sell orders have given smart money a good fill for their buy position, and once they've had their fill, they show their true colors by now violently moving price back up and creating this bullish fair value gap. That is your cue. That is where you want to look for your entry. This bullish momentum created by smart money is going to get fueled even more as price continues to go up and all these sellers now liquidate their position, and the short covering that ensues is going to push price even higher. Now momentum is on your side and now you are going to look for your entry. Let's see how. The final step in getting the perfect entry is the two entry variations that we are going to learn about in actually executing the trade. This is the most easiest part of the process and you can do it in a very mechanical way. Let's look at the two different types of entry variations that are possible. In this chart, you can see the first entry variation, that is the entry of a normal fair value gap. After reacting of a higher time frame point of interest, on the lower time frame, price creates a normal fair value gap where the third candle closes below the high of the second candle, and your entry will happen when price taps into this fair value gap here. A simple and straightforward entry pattern. The second type of entry is when price creates a breakaway gap after reacting of a point of interest on a higher time frame. You can see that in this chart where the third candle closes comfortably above the high of the second candle, leaving behind a breakaway gap. Your entry will be at the close of the third candle. You can either buy the close with a limit order or buy the market order. The only possible third scenario is that price does not create any fair value gap, and in that case, you don't get an entry. It's simple. You either get a normal fair value gap where you wait for price to tap back into the fair value gap, or you get a breakaway gap and you buy the close of the third candle when the breakaway gap is confirmed. To summarize, to get the perfect entry, you start by identifying the correct lower time frame to work off, wait for price to react, look for price manipulation, and wait for price to create fair value gaps in the direction of your trade, and take an entry depending on what kind of fair value gap it is. Do this in a mechanical way and you're sure to see success. Till then, take care and trade smart.